Hey, good afternoon, ladies and gentlemen. Good afternoon. Welcome. It is Thursday. Thursday the 26th, I think. Yes, 26th. Thursday the 26th of September, almost at the end. I'm assuming just by your messages, I'm assuming the sound check is there and I'm coming through loud and clear. Thank you very much, Luke. Good to see you guys. Good to see you. Hey, Dookie. Hey, Matthew, Luke, Michael. Good afternoon, Nadia. Good to see you. Right on then, guys. So, today, I am right in saying that we have the Fed Chair Powell speech coming up in 48 minutes exactly. Obviously, this is a big one, right? So, be aware. The US Open is going to be extremely... Actually, I'm not going to say will. The US markets aren't necessarily going to be extremely volatile, but I should expect quite a lot of volatility. So, as it happens, guys, unfortunately, it's not going to be an action-packed day because it's just going to be a sit and watch until we kind of see the dust settle. So once that comes to an end, then you guys, you can look at trading correctives and stuff like that. But the best course of action, if we want to be professional risk managers and we want to be protecting our capital at all costs, is to steer clear of the Fed Chair Powell speech and whilst that's going on. So we can certainly have a look at the US markets. We can have a preliminary scan of where the cash-rich versus cash-neutral areas are in the market so that we can get a good idea of where to trade into, where to trade from. But there will be no active market participation until at least quarter to three. And that's GMT, guys, quarter to three GMT. So for those of you who are not in the UK, you're looking at about 25 minutes past the news event. Okay, so when the news event takes place, news event is coming up in 46 minutes plus 25 on top of that, and then you're good to go. You can start trading again. Now, this Fed Chair Powell speech is coming at a really, really key time in US economic policy, also government policy, as well as we have a lot happening between Harris and old Trumpeteer at the moment in the US. It's a complete minefield. So make no mistake, it is high risk territory of the utmost level this afternoon. Now, I'm not saying, that doesn't necessarily mean that we're going to get those 1,000-point moves. It could be and I'm using quotation marks here, it could be a non-impact event. But it's the probability. It's increased probability of risk. So we don't want to be taking that on board. So we'll start from the top. We'll work our way down. First of all, we'll go through a review of yesterday's positions quickly, and then we'll restart from the top and work our way down for a second run at looking at where there's more potential. So this was our oil trade from yesterday. We were looking at the breaker structure. We were looking at the retest of the lower limit of the median of the trend here. This is the trend that we were looking at here. We look at this on a 50-minute time frame. It looks a lot less sort of appealing. That is the trade, and it was taken. Now the original TP was actually up there because of where the median was, right? So the TP was based on what we were looking at from the afternoon session. As it happens, the market actually didn't stop there. It did end up coming through anyway. So no matter what way you would have taken that trade, it would have been a winner. It was a really nice little trade. If I don't say so myself, really nice little trade. However, the main thing to note here is the sell-off that took place afterwards, which was incredible. Enormous sell-off that started taking place at about 5:30 this morning. And it really, really dropped. I mean, UK Brent at the moment is down 2.5%. UK Brent, for those of you who don't know, is the benchmark oil asset. Okay, so UK Brent is leads the charge, leads the way on oil rates. and it is down 2.5%. This morning, from the day's high to the day's low, it was actually down 4.08%, which was a huge, huge move to the downside. Now, definitely looking at this one coming back, okay? Definitely looking at that one coming back for a bit of a corrective. We'll cover that in a moment. I'll come back to it. Gold. So gold came down, dipped its toes in the water, straight back out again, and came up for another all-time high. This really does go to show where the dollar is. Look at the DXY in terms of its positioning here at the moment. Okay, the 4-hour time frame, fair enough. But this is the US dollar at the moment. Okay, huge, huge move back away from liquidity. And at the same time, gold is actually rallying as well. DXY, range, gold. So, you know, okay, yes, we do get these intraday areas where the old school understanding of the gold dollar dynamic of the safe haven cash flow flowing from one to the other still takes place. Like this intermittent part here, we've got this, you know, 3-bar move down on the 15-minute time frame. On the dollar, we have this like 2-bar, 1-bar move up. So we still have these kind of intermittent little areas where the synchronization of it is kind of like old school, the old school safe haven understanding. But for the most part, there is a shed load of fear in the US. And it's not just that, it's also Russia. Because that's the other half of the geopolitical situation. Because Russia are obviously cashing in gold as well to fund war. And so therefore demand in gold is rising as the gold reserves are depleted. And so therefore the price of this asset is rising as well as a result of that. But it's just non-stop. And fundamentally speaking, this is bullish all the way. We keep looking for these areas for retest trades, and you know it's kind of frustrating at this stage because every single time we're waiting for another price action retest to happen, more often than not we're not getting that retest. It's just continuing upwards. So if we look at the daily time frame, okay, that's where the daily is right now. So we really are powering up at the next level kind of strength here. You know, we've breached I beg your pardon, we haven't breached it yet. So we've made an all-time high here of what, 26.87. I mean, I was looking at 26 as a forecasted price in the next few months, thinking that there was going to be a sort of more significant period of consolidation before we reached it. We've reached it in no time at all. So really impressive. Very, very impressive stuff. Now, in terms of actionable content on gold, we are ultimately looking for trades on both sides of the market. Yesterday, after yesterday's rally and reaching this high, I was almost positively sure that we were going to get a better price action pullback than just a little touch down here and then on its way for a new fresh all-time high. As it happens, obviously that didn't pan out. But both sides of the market, it's not a difficult asset to trade because this is very, very bullish, trend continuation all the way. You're looking at the break, close, and retest of the top for longs, fixed 1-to-2 risk-reward ratio trades just over and over and over again. Or you're looking at the breaker structure to the downside for those deeper, TJ, correctives here, back down to the previous level of liquidity. So you've got trades on both sides of the markets continuously, and you just need to keep hammering it out like that, you know, just powering through over and over again. So Aussie yen, this has been a real temperamental beast. So we did actually do quite well with our breaker structure trade to the downside. We got down to around 98.59, and unfortunately this one came back to stop us out. Nothing wrong with the entry or stop loss or anything. Again, this is process driven trade. Definitely happy with it. It was just unfortunate it came against us. We've still got a trade running. This was the long pending order that took place afterwards, and this triggered at around 6 a.m. this morning. It's come bloody close to the stop, as you can see here, guys. Really, really close. We are in profit at the moment. It is still live and running, as you can well see. But We are yet to obviously determine whether this one is going to drop in the bag or not. Yeah, it's the verdict's really out on this one at the moment. There's nothing I can say about it. The great thing is though, our level of liquidity and where we've got our stop loss is definitely handy. That one's doing its job. It's having the desired effect. I'd probably have that zone just a touch higher, really, if I was a perfectionist. So about there. And this is a little nub below, but that's exactly why we have our stop losses, a nice margin above our zones. Yes, okay, we're still going to get nailed on it if the market wants to take a turning point. But this is a really nice real-time example of why we have our stops where we have them and not there. Okay, because if we have our stops there, then we would see a lot more losses incurred. So, yeah, that's that. Euro again, nothing to say on this one. Actually has got some really decent trading parameters, to be honest, in the no man's land between these 2 points. But at this stage, yeah, there's nothing to say on it. You know, we've still got both trade ideas in here ready to go, and we're just going to be sort of sitting tight and yeah, waiting for either one to trigger. Euro NZD. Okay, Euro NZD has got all of the data missing from it. We did take a win in Euro NZD, so that was quite decent. We had the long. The long breakout was, I can't even remember where it was, somewhere around here. We got a 1 to 2.4, 2.5 in it, which was really nice, as per the setup yesterday. From that point on, we've actually got a successful short that's come out of it as well. I unfortunately did not trigger this trade. The short was never part of the plan. But that being said, still a really nice short. Perhaps one of you guys actually managed to notice that one. Unfortunately, not me, but it was a really nice short play anyway. We'll come back to the Euro NZD anyway, because that one's looking like it could set up for another trade soon enough. Pound yen. Again, this was same as the Aussie yen. This was a stop out, this one. Actually, this trade was a stop out in the same damn candle. So we came down with this real big wick, came straight back up and stopped us out. The whole thing was done in dust in the space of 10 minutes. So yeah, a little bit unfortunate that, you know, I'm afraid. And USD China, USD China is there basically. Came down, big wick low. This is about, yeah, 2:45 in the morning, same time as the other wicks that we've seen in the market. Came straight back up, knocked us out, then straight down to target. So that was a bit of a shame as well. I doubt many of you guys would have taken that trade anyway, but yeah, that's a loss for me on that one. And then of course we had the US, and yeah, the US was actually really good yesterday. Really strong performance from the US. The Dow Jones trades, both the short from here and the short down here, was successful. We didn't get any buybacks, obviously. We just dropped straight through liquidity. Came all the way down to this really nice level of liquidity down here. So this is not a difficult one to spot right in here. So that's really nice. And then from that area, we saw this beautiful buyback. This buyback took place in the Asia session overnight. So obviously, few of us guys wouldn't have been able to get stuck into this one. Obviously, some of us could, but the majority of us could not. And we'll come on to that one in a moment as well. I mean, you guys can probably tell where I'm going with this because the parameters today are exactly the same as they were yesterday. So there's not actually any there's not actually any reason for me to switch things up or change things on the Dow Jones. We are simply looking at repeating yesterday's price action. It's just today we have to give it a little bit more leeway because of the Chair Powell event, which is going to be out in, what, half an hour now or something? Yeah, half an hour. So, right, go right back to the top then. So, UK Brent, huge sell-off. We've come down here at the moment. We're resting on top of a port liquidity. The major inflection point is down at around 70 to 69.50, and we are not down there yet. We have opportunities on both sides of the market, though, for Brent at the moment, which is always good for us because it means we have options. We're not just sort of going to be strangled to one bias. So, the breaker structure, I mean, first of all, we've got this point in here, right? So that's one point. You just thin that up, make it nice and neat. And we also have the structural point here, which is really nice as well. We've had one attempt at this, and this was a failure, but it doesn't mean that it's not going to go there. And does anyone have any ideas as to what could offset the risk from this? So imagine, just hypothetically speaking, if we break structure again on this element, what do you think about the price action in this area in here offsets the risk of this fake out happening and us being able to go for another break of structure attempt at longing to here? Okay, let me just so just inside this piece of price action. Anyone else? Anyone else got any ideas? Fake out either side of the block. Yeah, that's actually interesting, to be fair. Yeah, I wasn't actually thinking of that one, but yeah, that does definitely add confluence. Anyway, I mean, really, I was just looking for other answers to see what everyone was thinking. But Nadia's taken it out of the bag straight away without any hesitation. So good on you, Nadia. Yeah, you're absolutely right, pal. We've got low number 1. We've got low number 2. Okay, this is a strong indication that the market wants to do this. Right? So, as the market comes down and we trend lower, we have to come down and we get these points, don't we, right? Market comes down and we get these points. So what I'm expecting here is we've had proportionate sized pullbacks for the size of the moves down so far in this wave. We've had then a huge move down, which was double or 2.5 times the moves down that we've had prior, which means that we're going to get 2.5 times the price action pullback. Now, that's just basic mathematics. It's not to say that this is going to be guaranteed. Obviously, there's no such thing in the markets. But that's what I'm going with. That's my strategy for this. So if we get a break of structure above this point here, I am then going to jump in for another 1 to 2.1, 1 to 2.2 trade idea long in Brent. Essentially, the same exact trade idea that we did yesterday. That's what I'm looking for here today. Now, if you want to take a short, the short is really easy. We've got the major inflection point here, right? That's non-negotiable. Major inflection. So then it would make sense that if the market's going to drop down below this area and break structure, we're probably going to go to that major inflection point, naturally. So then what we're looking for here is the short below there, target profit, and your stop loss above there for a 1 to 2.3. No, 1 to 2.2. 1 to 2.2 trade there. Now, both of these setups can be triggered as pending orders. Okay, you don't need to be sat in the market waiting for this to happen. So you can put your pending orders in and get ready for it. The no man's land is quite wide in here, but the reason I'm not interested in participating in the middle of this no man's land is because of this here. Yoink. So that one goes right across there. And I'm not interested in trading around or amongst that kind of liquidity. Okay, so we're just going to scrap the middle out here. We like the long, we like the short, nothing for us in the middle. Right, gold. I mean, guys, to be honest with you, I don't really have too much more to say about gold. The bottom line is we're looking at real tight 1 to 2s. Okay, nothing extreme. Just sort of really small 1 to 2 risk reward ratio trades. Just like that. Okay, so 1 to 2 break out of the long. And we're also looking for the same at the short. Okay, I'll provide you the template for them. But this is, real simple stuff. Yeah, so it's like that. Okay. Kind of thing we're looking at for gold. Aussie CAD. So this is at an interesting point, but we already know what we need to do for it. Break, close, and retest at the top for the long. Break, close, retest for the low for the bottom. The range it's currently in at the moment, it still is exactly the same for me. I'm not really too invested in the idea of trading it between these two margins at the moment. Still seeing inconsistency. This is the best run we've had yet. But even so, if we're looking at the breaker structure being here for the short, our trading margins are seriously getting reduced. So again, I don't want to be bothered with it. Aussie yen is Aussie yen. Aussie NZD still didn't make it up to the high liquidity point there, so we're still at that one at the moment. Aussie dollar, yep, still trading inside daily liquidity, so nothing to be said about that one yet. CAD against the Swiss. So this one was mental, and that was early this morning around 8:30. We had this huge blow up. Now this trade idea looks like this, and I didn't mention this for a reason. It's actually because it was embarrassing what happened. So my entry was down at around 62.84 or something, or 83, and my stop loss was still triggered the same. So my trade idea, I shit you not, was like that, for a 1 to 0.4. I mean, obviously, you know, I'm killing it right now with that trade. Definitely one to flex about. But yeah, I mean, sometimes at the end of it, I don't know what the hell happened this morning with my broker, but look, that's just one of the things you have to contend with sometimes. With the markets. So, you know, there we go. That's that. We'll move on swiftly. But anyway, at this point in time, there's nothing to be said about the CAD Swiss apart from the fact that it was the #1 trade of the week. Looking at the CAD Yen, still don't really want to be getting stuck into anything around here, so we're going to give that one a pass. Euro Oz is a pass. Euro Yen, frankly, is a pass because that's the inflection point. So we're just kind of like real major indecision at the moment. Euro NZD, what the hell? Okay, it's brought back all the thing now. So that was the long. This was the short. Absolutely beautiful short. Really went well. We still have the capacity potentially to go short underneath here. So you could be looking at another short trade at around this area. Possible break of structure. Target profit, stop loss, that's showing a 1 to 3.66, which is insane. We don't want to be looking at risk reward ratios that high, so I'll probably be bringing that up to 1 to 3, which is still incredible, right? It's still really good going, but that's probably where my maximum is. So give that a nice margin above the breaker structure area. So you can lock that in as a pending order. We do have the opportunity as well to take another long based on the breaker structure here, so to repeat yesterday's trade and do something like that, no problem at all. And this space in between is representative of our no man's land, so no trading to be done in the middle of there. Pound against, no, not a fan. GC, sweeping move to the downside, consolidated and then up again, was not bad. But so many various roadblocks here. Again, I'm feeling really unsure about the GC, so I'm going to give that one a miss as well. G Swiss, no. Pound Yen, no. Cable. So what have we got here? We got a liquidity BCR of that point. That's decent. We've got new structural anchor point here to be broken out of. And then we've got a TRF situated there. But I mean, honestly, that could be a really short trade, couldn't it? Could it? Or am I looking at a pipe dream? I mean, it could be, couldn't it? I'm not really sure. Let's have a look. Yeah. So break a structure above the high. Yeah, I don't see why not. It's a dollar asset, so you'll have to be careful for this afternoon, of course. And that goes to say with all of the dollar instruments, but and gold as well for that matter. But yeah, I think it's a reasonable trade idea. It's basically the same margin there, well, maybe a little bit bigger of a margin than it is here, and that was a pretty sort of sustained move that we've had. So yeah, I think the cable, a very small cable long for about 20 pips. I think that's all right. NZD CAD, probably not at this stage. Beautiful move that we've been having so far, but this is kind of the reverse of catching a falling knife. So yeah, not really up for taking a long at the end of this move here. No, definitely not on that at the moment. No. NZD dollar looks very much like cable. I'd rather trade the pound off against cable though at the moment. Got to be honest. It's a no for USD CAD. It's a possible for USD yen. Let's have a look at this one. So we've got the floor, we've got the ceiling, we've had a fake out. So then the fake out point becomes the new breaker structure point. So that's situated here. So then we're looking at these two trading margins, and then yeah, the median of this point though is just a fraction below that, isn't it? So then we'd be looking at another cable style trade of jumping in for a very small position. So that's the median. What's the margin on the median, ladies and gents? What are we thinking about that one? I'm not entirely sure about that. I mean, don't get me wrong, we've had a lot of success with this. Well, 1, 2, 3, 4, 5. Loss. Oh no, that would be... No, that wouldn't be a loss, would it? Because it's still in the downward move. We never had a pullback. So, I mean, there's a lot of success in that bottom half, I must say. What are you guys thinking? What do you think about that? I mean, I really don't like going short or long in the lower or the upper half of the range. So if it is going to go down there, it would be very unorthodox for me to do that. But I also can't ignore the fact that we've had 6 consecutive successful waves down there. I mean, I'm a probability trader, right? That is high probability. You guys got any opinions? Any thoughts on that? Wakey, wakey. God, you've all gone to bed, haven't you? I'm talking to myself on here. Come on, Nadia. Come save the day. I'm not sure. I would maybe take it. I would maybe take it. That's great. A lot of conviction there. I'm really liking it. Love the confidence. Yeah, I mean, yeah. Do you know what though? Unsurprisingly, I'm actually very much the same. I'm really into two thoughts about this. I don't trade the lower half of a range for a reason. And even if that has a lot of previous success, it's not indicative of future results. I know we've all seen the old cliche disclaimers. Sure, I've got a few lying around in it somewhere as well. So I'm probably going to leave it. I probably am going to leave that one, sit it out. And then that brings us finally onto the US stocks. Now, I mean, these stock markets have been absolutely flying. Obviously, we've got a major fundamental catalyst upon us. We have to be very vigilant, very patient, let it get out of the way, and then we can start start our plays for the afternoon. There's not much work required today. Same trading parameters as yesterday. We're going to be looking for the breaker structure points above here to go long up to there. Short from here back down to here. Short underneath here to come down to here. Long above there to come up to there. So we're really sticking to yesterday's trading parameters with the Dow Jones. It's not difficult, guys. It does not need to be difficult. Breaker structure point for a long is there. Breaker structure point for a short is in here for this area. Breaker structure for the long. Let's just bring this one back. So breaker structure for the long is going to be there. Breaker structure for the short is already in place. There's nothing wrong with that one. Okay, so really nice trading margins today. You're going to be looking at the median, this point here for your TP, for your shorter trade. Okay, so really nice spaces to trade in this Dow Jones at the moment. For the NAS 100, things are slightly more difficult because of where it is. So, of course, if we go out to the daily time frame, it's reaching quite far. It's a very, very big candlestick today. And we're looking at a 1.4% gain. So third largest gainer today. Number one place is the 225 index, which is quite ordinary, to be honest, with gains or losses. Second is the DAX. Oh, no, sorry, guys. Wait, sorry. The EU 50 has risen 2.3%. I do beg your pardon. I missed that one. Wow, yeah, 2.3% for the EU 50. Wow, okay. So yeah, that's a big gainer as well. But I mean, stocks are having a good time today. Put it that way. If we go back in time here, we've got a decent margin up to probably at around this space in here. There we go. So probably about there. And if we go back down to a 15-minute time frame, that looks like that. Oh, come on, there we go. So then you're looking at the breaker structure point from the nearest anchor, wherever that's going to be, and then long up to 2045. The short is going to be below the breaker structure point in here. And then, or alternatively, obviously down here. Remember though, we do have to wait a while before we can execute any of these trades. So this is not to be taken at 220 or 230 or 240. We have to be waiting at least 20 minutes or so after the speech has come out to see where we're at. But you're going to be focusing on your anchor points, the nearest one to you, where are you trading from, where are you trading to, and following the process out just like that. So we've got a lot to get working on, team. Lots of fresh positions for the order books this afternoon. So lots to go away, have a think about, plug in some numbers if you haven't done so already, and go from there. All right. Do you have any questions? Everyone relatively clear on the plan today? Yep, all good, Michael. Yeah, my pleasure, mate. No worries. Good stuff, Nadia. Yep. Most likely not trading today at all. Okay, Matthew. Yep. All right, fair enough. All right then, guys. Well, if there's no other questions or anything, I'll wrap things up there. I hope you all have a fantastic rest of the day. Good luck out there in the markets. Remember, it's going to be quite choppy, so just be vigilant. Stay on your toes, and let's go get it done. So take care, guys. Have a good day, and I'll catch you soon. Bye bye.